Hi, I am Anna. I come from www.ntvforex.com. UK employment edges up to 4.1%, as Ocado's sales surge analysis http ntvforex.com news ID CD82879152 2027 am. European markets have opened mixed this morning in line with a similarly mixed Asia session despite a raft of well-received earnings updates. The FTSE 100 is outperforming, helped by a decent performance from retail with Ocado and H&M giving the sector a decent lift after a lot of recent grim news. The explosion in online shopping that the pandemic has brought about is very evident in Ocado's latest Q3 sales numbers. Retail revenue grew 52% in the quarter, rising to $587.3 million, with the average spend coming in at $141 and average orders per week rising to 345K from 315K, from the same period a year ago. The company also updated on its recent switchover to Marks & Spencer, which has an initial range of 4,400 food products, along with 700 from the M&S lifestyle range. The company did offer some guidance saying that they expected full-year EBITDA to come in at around $40 million, helping to push the shares back towards their August highs. Marks & Spencer shares have also seen a decent uplift on the back of today's Ocado numbers, in a sign that this deal could well be the moment that the tide starts to turn for the beleaguered retailer, as it looks for a change in its recent fortunes. Another retailer reporting a pickup in spending patterns has been H&M, which has said that Q3 trading has been better than expected, with Q3 pre-tax profits coming in at SEK 2 billion, well above estimates of 246 million Swedish kronor, but unsurprisingly well below the levels we saw in the same period last year. Sales came in at SEK 50.87 billion, a decline of 19%, with 200 stores still temporarily closed at the end of Q3. Given the disruption caused by COVID, these numbers are pretty encouraging and suggest that despite the losses incurred in Q2, the consumer still has the capacity to bounce back. The big question is whether this momentum can be sustained into Q4, as unemployment levels in their main markets start to rise. The aerospace sector has been hit especially hard as a result of the pandemic, but not all companies are suffering to the same extent. Take today's trading update from Chemring, which has seen order intake to August 31 rise 4%, with an order book of $452 million, helping to push the shares up sharply in early trading. The company's exposure to defense has helped insulate the business from the worst effects of the pandemic, despite the company seeing an increase in costs as a result of health countermeasures to secure the safety of their staff. All of its divisions are performing well, with Sensors and Information reporting a 32% rise in orders from a year ago. William Hill shares are higher after its U.S. partner Caesars signed a deal with ESPN, which will carry betting ads for ESPN digital platforms to U.S. states, where betting is legal. This deal has also given a lift to GVC and Flutter Entertainment, who both have exposure to the US market. The pound has been largely unmoved by this morning's latest unemployment numbers. UK ILO unemployment for the 3 months to July edged up to 4.1%, from 3.9% as the economic damage from COVID-19 starts to make itself felt. The numbers still don't include those who remain on furlough and are likely to lose their jobs when the scheme expires in October, which means the number is likely go quite a bit higher as we head into autumn. In terms of the number of jobs available, we've seen a fall of 695k jobs from where we were in March. On a more positive note, there was a 30% increase in the number of vacancies in the June-August period than was the case from the lows in April to June. While UK economic data has continued to show signs of improving, it's important to remember that the government's emergency measures are masking the worst of the economic damage, and in the absence of an extension of the furlough in key areas in October, the line of least resistance for the unemployment numbers is still skewed towards the upside. The US dollar has slipped back a little more after yesterday's losses, as the latest Fed meeting starts to get underway later today, with gold prices back at one-week highs. U.S. markets look set to open higher after yesterday's positive session ahead of the start of today's Fed meeting, with the focus also on today's Apple event and some more earnings updates. We have the latest numbers from FedEx and their Q1 numbers for the year 2021, as well as Adobe, who will be updating investors on their Q3 performance. At its last set of numbers, FedEx saw a bit of a mixed bag, however that didn't stop its share price from surging higher, despite annual revenues coming in below the levels we saw in 2019. While its residential business did well with a sharp rise in online deliveries, its commercial division was hit by the shutdown of the civil aviation sector in the early part of the pandemic. Additional safety measures saw the company incur pandemic-related costs of $125 million, which has seen its margins shrink from 6.4% in 2019 to 3.5% in 2020. If the US economy is on the cusp of slowing down, then we should see evidence of that in today's number as online and freight deliveries start to show signs of slowing. Expectations for Q1 are for profits to come in at $2.52. Adobe is another tech stock that has seen its stock price surge to record highs this year, due to the surge in home working. The company that is the home of the ubiquitous Adobe Reader app, as well as Photoshop, and other digital marketing tools, has seen its revenues surge in recent months. It is already on course to easily beat last year's annual revenue numbers of $11.17 billion, helped by its diversified product mix of digital media and cloud business and print and publishing. Its cloud business in particular has been growing strongly, with growth in both tools for designing and publishing creative content for photographers and graphic designers to products that deliver functionality in advertising, marketing and analytics. Q3 profits are expected to come in at $2.41. There's always a lot of hype around these Apple events, and normally with good reason, as they deliver a porthole into the thinking of how various Apple products are likely to develop over the next 6-month period. Today's Apple event will be closely scrutinized for any clues about the timing of a release for a new iPhone, which isn't expected today, as well for the level of improvements to products like the iPad and Apple Watch. We've been waiting for some time for Apple to outline its plans for a new 5G phone, however, given the recent disruption caused by COVID, this deadline is expected to slip. The success of the new iPhone SE could well prompt Apple to focus more on the lower end of the iPhone market when it comes to its new iPhone 12, given the current global slowdown. In focusing its attention on the lower end of the market, along with services, the company has managed to offset the decline in iPhone revenues. However, the Apple TV product still needs to see significant investment if it is to take on the likes of Netflix and Amazon in the longer term. Apple certainly needs to do more to justify its current $2 valuation, and while the recent share split has made the shares cheaper and as such, more readily available to so-called Robinhood retail traders, there is a risk that its current valuation isn't truly reflective of the underlying fundamentals. Dow Jones is expected to open 100 points higher at 28,093. S&P 500 is expected to open 10 points higher at 3,393. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.